Hey guys, good morning. This is Luis Moreno with Simply Health Insurance Group in partnership with 360 Insurance Group. And I've got Phil from Allstate. Good morning, Phil.
Good morning. Good morning. Thanks for having me. Really
Oh,
appreciate the opportunity.
Awesome. Well, this is one of the ancillary products or the ancillary product that I like to use for my under 65 insureds and is what I promote to my agents. So I want to talk about the suite of products. But before I do that, guys, here's what I want you to do. Okay. Make sure you subscribe to this channel. We're going to have a lot of information down below, but subscribe to this channel. And Phil, what I'm going to do here is I'm going to set the stage for agents out there to know where these products can come into play. All right. So I'm going to share this screen, guys. All right. So I'm going to run a quote for an individual. Okay. I'm going to run one quote just so that you can see what happens to our insureds out there. So I have a 26-year-old male making about $13,000 and change. Okay. With this scenario, this insured is getting a $0 health plan, great health, no premium, awesome plan. It is with the carrier, Aetna. Okay. They got a $0 deductible, but here's the problem, guys. Look at the out-of-pocket maximum, $2,800. That is a lot of money, guys. Okay, I'm going to make that a little bit bigger. Let's see here. Well, at least I thought I could. Okay, I can't zoom in on this one here. But, guys, $2,800 is what this insured has a potential liability. Let's say that this guy's making $25,000 in income. It goes up, not that much, $3,000. Maybe they make $50,000 in income. Now it goes up to $8,900. So the income and the size of the household have a lot to do with this out-of-pocket maximum. All right, so the stage is there, $8,900. This is how I set the stage with my insureds. Hey, Mr. Insured, you got a great health plan, but you're going to have a deductible to meet and then an out-of-pocket to satisfy if you're hospitalized or for some other medical services. Do you have that kind of money? Normally, what the majority of my insureds will say is no, I'm living paycheck to paycheck. I may have a little emergency fund, but I don't have $8,900 sitting there. All right. Or maybe, this individual's making some lower income and I don't have $2,800 sitting in this account. All right. So we've got some ways to help our insureds with that. And that's where Allstate comes into place, the Allstate Health Solution. So with that, Phil, I want to ask you one question because you guys used to be National General.
Yes, that's correct. National General was purchased by Allstate approximately 2 years ago. And, with the Allstate name, it makes it easier to do business, quite frankly, especially at the consumer level.
Gotcha. Yeah, a lot of insureds, National General never heard of them. Allstate is a huge carrier around the country. And so it's got some name brand recognition. So for you guys that are wondering, well, Allstate, National General, it's the same company. So with that, Phil, I'm going to let you dive into the products that that we can offer our insureds to help them with these potential out-of-pockets that they could meet.
All right. Sounds great. You can see my screen?
Yes, I can.
Okay. So what we're going to do is, for those of you who are new, I'm Phil Mishler. I'm your sales representative for Allstate. I go where you go, wherever your travels take you for sales. I have a whole team of people that are with me to help support your marketing efforts. So right now, let me see if I can make this bigger. Let's see. There we go. Okay, so that's a big screen. So this is our quoting software. And what we're going to do this morning is we're going to put a female who is 45 years old. She is a non-tobacco user. And so today we're presenting short-term medical and then our suite of supplemental products that jive with what Lewis was saying, which is you've got most of your customers can't put their hands on $1,000 in an emergency. How are we going to handle that? So even if you're in here running a dental quote or an accident quote, because we do allow that to be sold standalone, our system's set up to sell our primary product historically, which has been short-term medical. So you got to answer the prior coverage question, even if you are not doing medical. We allow any day effective dates for any of our products except for Medicare. We do not require a social security number for enrollment. We will take anyone who's in this country legally. So that would include foreigners, foreign students, and for those of you who run into Spanish-speaking customers, all of our brochures are in Spanish.
And guys, he mentioned something here, legally. If they're not here legally, this product's not going to work for them. So if you've got people that have resident green cards, okay, those are going to be just fine. Is that correct, Phil?
Yeah, and we don't even ask for proof. We're leaning on the agent just to say, hey, are you here legally? If you're comfortable with the answer, then you move forward.
Perfect.
So once I put the demographic information in, you can see here that we have this screen set up to remind agents what we have available. And this really feeds into exactly what you were talking about. So if you read the title of this package, is Florida ACA Bronze or Silver Package. So these are two nice supplemental products that go with and support and spit out cash to help the customer with their ACA out of pocket. So this first product is the Plan Enhancer. We're going to get into this a little bit later, but I'll just tell you on the surface is accident medical coverage that gives your customer $8,550 per accident. The Plan Enhancer is an exciting accident plan because it also has a cancer, heart, and stroke rider. It's denoted here as CHS. And Plan Enhancer also has a sickness hospitalization rider. So what this means is each and every time this young lady were to get in an accident, she's going to get up to $8,550. If God forbid she becomes diagnosed with a critical illness specific to cancer, heart, or stroke, she would get that same payout, $8,550 upon diagnosis, not treatment. And then once per year, God forbid if she's sick or hurt and hospitalized, we will pay out that $8,550 in its total to your customer and help with the out-of-pocket. Then, in addition, down here is our no waiting period dental plan using the Aetna Dental PPO nationwide. So, and this one actually has vision included. So this is a great package. You have the ability to click this customize button here, and you could pick a package that works for you. Maybe you create a package just so you don't forget to talk about these supplemental products. And before I get off supplemental products, the people who sell the most supplemental, meaning accident, dental, critical illness, sickness, hospitalization, they do it on the front end before they handle the medical. So it's just a thought. You're going to have to work the way that you work, but the pros, the supplemental pros, they do it on the front end. And basically, you're telling the customer, hey, look, no matter where you go, whether you keep this plan for a long time or you become eligible for employer-based plan later, you're always going to have an out-of-pocket that you have to wrestle with. The prices for our supplemental products never change. So your health insurance could change every year. Most of the time, the price goes up. These supplemental products will stay the same. We do reserve the right to raise the rate, but we never have. So for today's purposes, though, we're going to click See All Plans, and that's going to allow us to see all the plans.
So, Phil, while we're waiting for this to pop up, let's go into
Yes,
the prior medical coverage that they've had. So they've had prior coverage. It affects the short term, but it does not affect the accident. Is that correct?
That's correct. That is absolutely correct. Okay. So now we're here at all of our plans. You can see all of our plans together here. Here at the top, we have these tabs that as you hover over them will turn blue. So you'll notice that the default tab here is short-term medical. And as I scroll down, you begin to see the plans and pricing. Over here is the plan name. Over here is the pricing. And what you'll notice when you see this is you'll notice that we have preferred and standard rates. So here's some information you need to know. If the customer qualifies for preferred, they would save 20%. So what does that look like? So what that looks like is this. These are not the health history questions. These are just the preferred rating questions. So no tobacco. They've had to have prior coverage 9 out of the last 12 months. Anything counts, and we don't ask for proof. Can't own or lease a motorcycle. No DUI or moving violation in the last 2 years. No high blood pressure, cholesterol, anxiety, depression. And then we have a separate build chart So males under 240 and under are good, and females under 190. So once you determine that that's the case, you're going to click preferred premium and you're going to click update. And when I do this, now you'll only see preferred. These are just one set of rates that are just the preferred rates. So we do break our product down into low, medium, and high. And I think this would be a good time to show you a brochure and probably make a little more sense. So let's see.
Hey, Phil, on that
Yes.
prior coverage, is that only affecting discounting or eligibility?
That's correct. That's correct. Yeah, we'll take anybody as long as you qualify, by answering the health history questions, no. But the preferred is available to anybody. It's just a question whether they'll get it or they won't get it. If they get it, they save 20%.
Okay.
Okay,
And that preferred coverage could be a group plan that they had. Could it be another short-term plan that they had that they're losing?
That's a great question. It could be anything. If the customer thinks it's health insurance, we'll accept it. So it could be a religious sharing plan. It just could be anything. So not a big deal. So as you see here, here's our little chart that this is in the middle of the brochure. Actually, before I got into that, so for those of you who are new to short-term medical never covers pre-existing conditions. It's designed for people who would say things to you like, hey, I never use my health insurance and I'm paying too much, or I'm paying too much and I hardly ever use it, right? So it's only going to be a fit for about half the people that you're going to run into. But where it's outstanding compared to an ACA plan is that we lease the Aetna Open Choice PPO network nationwide. So this network is going to have all the centers of excellence in our country. So Johns Hopkins, Sloan Kettering, Cleveland Clinic, Mayo Clinic, MD Anderson in Texas, which is America's best cancer center. So all those facilities are in network, plus all the providers. In most states, you'll have trouble finding a provider that doesn't participate with this network. But don't take my word for it. This is either pull up a brochure or take a snapshot of this web address and check it out for yourself. So if you have customers who don't get a full subsidy or they get a partial subsidy, they don't like their skinny network in whatever state they're in, or they don't like the out-of-pocket, those are going to be excellent fits for the short-term medical. To be eligible, they have to answer 4 health history questions with a no, because we're not going to look at the questions today. I'll just briefly tell you the questions. We won't take any pregnant women or expectant fathers because maternity is not a benefit under the plan. We won't take AIDS or HIV. Won't take anyone who's been recommended for surgery that hasn't had it yet. And then there's a large question that would knock out in the last 5 years: serious heart conditions, cancer, serious back disc disorders, and diabetes. Those are probably the biggest ones. There are a few others. So you can tell most people would qualify. All right. So what does the product?
I'm going to ask you one quick question here, because I do get this from my insurance. I'm not diabetic. I'm taking metformin.
If you have a diagnosis that has the word diabetes in it, so pre-diabetes, gestational diet, anything with diabetes, you're out of luck. Now, but you're really not out of luck, because we do have a guarantee issue short term, and I'll show you in a second. So we break our product down into low, medium, and high. We have these fancy names: Essentials Enhanced and Copay Enhanced. Your smartest money is here in the middle with this $1 million maximum. These plans, we're one of the few companies that still offers 100% coverage after deductible. So if you're here in the middle with the enhanced plan, you can do a $2,500 deductible 100% plan, a $5,000 deductible 100%, or if you're looking to promote some supplemental products, you take a much higher deductible, 10 or 25,000, and then 100%, and you can build some supplemental products around that to create a tremendous circle of protection for your customer. So I don't like to mess with the Essentials plan because, as you see, it's got a very low maximum. The Copay Enhanced is interesting. If you have somebody who would prefer a maximum that's higher than $1 million, you may want to look at Copay Enhanced. Copay Enhanced, they call it Copay Enhanced because it does have some copays to the primary and to the specialist. You want to be careful here, though, because it's only two per family member with a policy lasting over 6 months, and we do charge extra money for this plan. So really, I feel most comfortable here in the middle. One of our first dollar benefits is going to be this urgent care benefit. It's $50 to walk in the door and get diagnosed. If you're getting expensive testing done, MRIs, CAT scans, lab work, blood work, things like that, those charges will go to the selected co-insurance, not deductible. So if you were to sell your customer a deductible at 100% plan, anything they get done in the urgent care is covered at that $50 access fee. So that's the brochure, but let's take a look at the rates. So for this particular person, I don't want to have to explain what co-insurance is. I'm feeling like I don't want to talk about that today. So I am going to put this young lady in a $5,000 deductible 100% plan for $357.46. When I click Proceed Preferred, it will create this cart on the right-hand side, and I can begin building my circle of protection for this person. So if we go back up to the top here, a couple quick things. Your customer could save another 20% if they're purchasing a plan that lasts 12 months or less. They can make a single payment. If they do wind up getting other coverage, we will give them a prorated refund. In most states, we offer 2 ways to go beyond 12 months. Here we are in Florida. We can do 2 12-month terms. So two 12-month terms means the customer is going to know what their premium is for both years at the time of enrollment. And they're able to lock it and know what that rate is. And you really, I'm not aware of any ACA carrier that can tell you what next year's rates are going to be. So there's a real advantage to this. And that's full commission. If you take 12 months with renewal available, then you would run over here to the renewal options. If I pick 2 renewals with fixed premium, folks, that's a 3-year plan where every month's premium is exactly the same. So it's really good to bridge someone to Medicare. Let's say you have somebody who is turning 65, but the spouse is 62. Here's a great way to bridge them all the way to 65. And certainly for an early retiree, they love to be able to plan how much money they're going to spend on health insurance. And this is a great way to do it. I will just let you know, if you pick a renewal option, we do, it is a little less commission in years 2 and 3, but more commission in the first year. So in certain areas of the country, in addition to Aetna, we also offer the Cigna network. For much of the eastern half of the country, Aetna is typically the go-to. Just going to depend on where you are. So I picked a plan. I put it in the cart, which is here on the right. As I scroll down, though, I did just want to show you, we do have guarantee issue options for short term. So if you were to find somebody, let's say in July, who wakes up and they realize they need health insurance, they haven't had a life event, this is a product that would at least carry them to the next ACA open enrollment. Okay, so
hold up, Phil. I want to hit you up with a couple of questions on short term.
Please.
So you mentioned, which I like, ACA is not the answer for everybody, guys.
It is not.
It is a good option, but not the best option. So sometimes these insureds make too much money and they're healthy. Okay, then an ACA plan may not be the answer. So you definitely want to look at, have the ability to quote them short term and then build out a package. So remember that. Second thing, you made a great comment on this 100%. Guys, I don't like having to explain to my insureds how the math works with a deductible, a co-insurance, and an out-of-pocket maximum. In the short-term world, okay, this is a little different on how the out-of-pocket is handled compared to the ACA world. In the ACA world, the deductible is built into the out-of-pocket. So if the out-of-pocket says $2,800, it's $2,800. In the short-term world, you have to add the deductible plus the out-of-pocket. So you got to run that math. So when you do a 100% plan, the deductible is the out-of-pocket. Very, very easy to explain. So Phil, will you scroll down? Okay, well, you know what? It's right there. The enhanced PPO, 2,500, 100% plan. What that means is after they spend $2,500, that's it. They've hit the limit. And at that point, it goes to 100%. Insured is responsible for 0%. So know that, guys, that it's a very, very easy plan to explain, and also a very easy plan for our insureds to understand. All right, let's build it out. Anything else there on short term that I missed, Phil?
No, it's a fit for 50% of your customers. It saves the average individual $3,000 a year that they could use for something else instead of just forking it over to the insurance company. So use it when you need it, and just know that there's people who really value having a nationwide network and not a skinny crank down HMO where they only get local hospitals. You know, you really need to just know that there's other things out there. And of course, the out-of-pocket goes up every year on the ACA, where a short-term medical, they're pretty static from year to year. Plus the out-of-pockets, you can definitely buy a lower out-of-pocket.
Gotcha.
So yep. So in most states, we offer no waiting period dental plans. So that is called the, as you see the names here on the left, the Select Dental. There's a couple different plans here. Our largest seller is right here, this Copay 2. I'm going to show you why we think why it's the best seller. But in addition to the Copay 2 is it's $44, right? But if we go down a little bit, we could do the richest non-copay plan, which we call the Prime plan. It's $39. So let's take a look at the brochure and see what's in it. Let's see. Here we go. Okay. Get rid of that. All right. And then go to the grid. Like the grid. But before we go to the grid, again, this is the Aetna Dental PPO is turned on nationwide. So you know how dental works, folks. If the customer's dentist is in it, it's great. This is no wait. So if your customer's got teeth that need fixing, this might be the plan for them. So here's the grid for the non-copay plans. Phil Mishler always likes to start with the richest plan. Can always work my way backwards. So if I take the Prime plan, I'm going to have a $2,000 maximum, a benefit that grows year over year until I get to the third year, and I'm at $3,000 maximum. That's richer than most group dental plans that are out there. The dental benefits are pretty standard, $50 deductible, preventive's 100%. But you see from day one, they're picking up some major coverage, right? And that benefit amount grows in the second year on major to 50%. So this is an outstanding plan. But I also wanted to show you.
Phil, do me a favor. Can you go right up just a little bit? Because my agents, or a lot of agents, don't know this right there. Guys, if you want to know the difference between basic and major, you've got a little explanation down here at the bottom. And just the way I explain it to my insureds is basic is the small stuff. Major, it's the big stuff. Okay. And there's the major: crowns, oral surgery, composite fillings, your dentures, implants. Do they cover implants by any chance? And sometimes I step over that.
We offer denture and implant coverage on the senior version, which, not to make you dizzy, but we'll just quick look at the senior real quick. So here's the senior grid. Senior grid covers dentures and implants on the richest plan. But let me go back to where I was. Yep. So speaking of crowns, I'm getting a crown. I have to leave to get a crown in 15 minutes. So, and I don't have this plan. I wish I did. But anyhow, so you can see the maximum grows year over year. The richest plan does include orthodontics for children. And like you were saying, basic services jump to 80% in year 2. Okay. Also comes with an option for copay plans. Okay. So specifically Copay 2. The reason Copay 2 is awesome is it has no maximum. There is no maximum. What else it does for your customer is it provides dental treatment certainty. So what I mean by that is, like, so today I'm getting a crown. I have no idea what I'm going to pay for that crown until they hand me the bill. But if I had this plan, okay, and you can see it's broken into major tier 1, major tier 2. So major tier 1 is a less expensive procedure. So we could assume my crown this morning would cost me $500 first year if I have this plan. But you can see the copays go down in second year. So, I mean, this is a hot plan. I've never seen a richer dental plan. These plans also come with vision. So the vision benefit is every major chain, including Sam's Club and Walmart. And you can see the benefits here, but it's to add level 1 is I believe it's $10. Just look at the vision. Yeah, it's a $10 swing for vision 1. So for this young lady, I'm going to go ahead and put her on Copay 2 because I like it so much. Let's see, copay 2. So it gives her dental treatment certainty. All right. So when I click on the fixed indemnity tab, the first product you'll see here is called our Access Value. Access Value is a fixed indemnity product. And what this plan does is gives your customer cash to use any provider of their choice, or they can use the First Health Network. What's cool about Access is simply that the rates never change. Whatever you buy this medical plan at today, it's going to cover you all the way to age 65, and the rate will stay exactly the same. Where it falls down a bit, so to speak, for lack of any other way to say it, is in the hospital. So if you're in the hospital, it caps out at $6,000. You could be at a hospital, it costs 10 grand, you'll be underinsured. But what we love this plan for is a super supplement, right? So for 117 bucks a month, which is a bit pricey, but if our customer had a higher out-of-pocket plan, it might make sense. And this plan would spit out cash for office visits, x-rays, lab work, inpatient hospitalization, outpatient surgery. It's pretty cool. So if you get someone who's young enough, you could consider the value plan as a super supplement. But what I really wanted to show you is down here, which is the hospital expense protection plan. So folks, this is cash once per year if your customer is hurt or sick and they're hospitalized. And I have a brochure, and I think the brochure would help us, but some of the benefits of this plan, in addition to getting a lump sum once per year, if you're hurt or sick and hospitalized, is we also pay $150 a day for the first 31 days. And it comes with a $25,000 air ambulance benefit. So it's pretty rich. These plans are medically underwritten. They do, well, it's a simplify issue. They have to answer 3 health history questions to get hospital expense protection. And I thought that it might make sense to go to the brochure, which is here, and go to my infamous grid in the middle, which is here. So you could see here, again, just focusing on the richest plan, Plan F, my customer will get $3,000 once per year if they're hospitalized, $150 a day for the first 31 days. But this particular plan kicks out $75 twice a year for office visits. And it has this neat feature where if your customer, I don't know if this ever happened to your customers, you go to the hospital, you're not admitted, you're actually in observation. So this particular plan actually covers an observation benefit. You have the $25,000 air ambulance, and there's even cash for x-rays and lab work. Okay, so then let's go back and let's just look at the price on this. So, oops, I forgot to mute my phone. All right, that's real. All right, so this plan is $44 a month, but you can see we have options that go all the way down to $25 a month. So in this case, we definitely want to give this young lady the richest we can. So we'll add that to the cart. So that's hospital expense protection. All right, so accident. So this is a huge one for Lewis and his team. So we have several different we have many accident plans, but the one I think that's the strongest, and let me see if I can blow this up quickly here. The strongest. Yes.
Beautiful.
So yes. So, so remember that Plan Enhancer is lump sum accident. So in this particular case, this first one is AME stands for accident medical expense. So this particular plan would kick out $2,500 each time this person has an accident. There is a $250 deductible, but the deductible reduces the longer they have it. So if they stay with us to year 3, which most people do, the deductible on the accident drops to 0. I can't even believe it. I mean, the price is $3 a month. Like, I don't know what this should be on everybody's plan, right?
Exactly. But you're not going to make a lot of commission, but hey, we're about taking care of the insured here.
Right. That's a good point. So, but what's cool about Plan Enhancer, it has 2 riders. It has a sickness hospitalization rider, which it's very similar to the hospital expense protection we just talked about. So what this plan would do is give the customer $2,500 per accident plus $2,500 once per year if they're sick and hurt and hospitalized. We'll also have a cancer, heart, and stroke rider denoted with this acronym CHS. So again, it's just lump sum if they get diagnosed with one of these dread situations. We push the cash across the table to the customer. Okay. But as you remember, I put the customer on a $5,000 deductible plan. So we want to fully gap it. So this $5,000 Plan Enhancer would do the trick. It's only $19 a month. What's interesting about the plan enhancer, though, is the out-of-pockets go up to match. This is specifically designed to match bronze ACA plans, right? So some of them would be, that might be an older one, 8150. I
That's
think.
an older one, yes.
Yeah, the bronze out-of-pocket is what, 9100? So this would
I
be,
think that's state dependent, but I think we're almost at 87 or 8900.
okay. Okay. So we give you all these options all the way up to, if you can believe it or not, if you have someone that has a lot of accidents, $17,500 per accident, plus an equal amount for cancer, heart, stroke, and an equal amount for sickness, hospitalization. So it is an awesome plan. All of these plans can be sold standalone. We do offer group list bills. So if you had an employer group, an association that wanted to offer these benefits, we could do that with a minimum of two takers. Okay, so we did. Now I'm quoting in Florida today, so we don't have the critical illness approved in Florida. But what we do have is cancer, heart, stroke standalone, and the critical illness looks very similar. So with cancer, heart, stroke, it's real simple, folks. You get 25,000 all the way up to 75,000. We issue this to age 59, and you can see the premiums here. And this product is really for somebody that might have a family history of cancer. And some of the folks, so 40% of the people you meet in a week have a family history of cancer. Some families, it's so bad they know they're getting cancer. So this is a way to provide some high dollars to the customer on diagnosis, not treatment. This is money they can use to bring loved ones to hospitals, pay out-of-pocket expense. It's a real key part in a circle of protection. We do offer inexpensive term life insurance. It's 10-year term with a 5-year rate guarantee. And you can see it's dirt cheap. Like if I found out this young woman had 2 children with an unfunded college education, then I could put 100,000 to life. In this case, I'm just going to put 50. And so in the card here, you'll see we have a 5,000 deductible 100% plan. We have the no waiting period dental plan with has no maximum, and it has 2 set copays that reduce in year 2. We have the hospital expense protection. So God forbid this person needs to go to the hospital, we're going to kick out their exact out-of-pocket amount to help with the satisfaction of the deductible. And then we have the plan enhancer with all these other benefits, and then the term life insurance. So it's a really, really strong package. And again, this would be somebody who doesn't qualify for a subsidy. And this price here, you folks know, an ACA plan without a subsidy for a single person, $454 at age 45, that's pretty much what you'd get without a subsidy, but you're getting all this extra stuff. And again, right, you can go in here and just do a dental. You can go in here and just do an accident. It's not required to buy the short-term medical. What questions do you have?
Well, I do me a favor, because I want to go back to the plan enhancer, and there's a couple of things. So that's the plan that I train my agents to offer on every ACA plan. So plan enhancer, guys, can you pull up this brochure?
I can.
So a couple of things. If you just do the AME, the accident medical expense, okay, and you select the $2,500, correct me if I'm wrong, Phil, but that's a reimbursement.
Yes, that's correct. That is correct.
So, let's just say a kid breaks their arm, all right, and they only have $1,000, maybe ER bill or whatever it may be, urgent care. We're only going to reimburse them up to the amount that they spent.
That's
to
correct.
The benefit amount. Okay, that's the accident. So from there, guys, I like to build one step up, which is the hospitalization. Because if they get hospitalized due to a sickness, the accident plan is not going to do anything for them. So you got to bump it up to the sickness. The sickness, guys, on this one, Phil, again, correct me, it's not a day-to-day benefit. In other words, they go in at 11 o'clock that night, and may get out that morning. It's not, that is a different day, but they have to be in the hospital for a total of 24 hours, correct?
As a matter of fact, it's funny you would say that. It's right down here at the bottom. Hospitalization must last 24 hours. There you go. So
okay.
These are things to keep in mind. Sometimes you need to coach your customer, and this is one of those times.
Gotcha. And now this one is a lump sum payment. So they're in there 24 hours. I don't care what the bill is. The carrier is going to drop the benefit amount to that insured in its entirety. And then
That's
the
correct. They get lump sum, no questions asked. Yep.
beautiful. And then the cancer, heart attack, or heart and stroke upon explain this one because I don't do this one very much.
Oh, so a lot of our competitors won't pay out until your customer starts receiving treat. They have to prove they're receiving the treatment. We push the money across the table as soon as they can prove they have that diagnosis. So
Beautiful,
it's
easy,
the
easy enough.
customers, in a nutshell, they're getting their money faster.
Gotcha. Now, I'm curious here. So let's say that they're hospitalized due to a stroke. Do they get the benefit amount for the cancer, heart attack, and stroke, and also the sickness?
That is correct. They're independent benefits that are paid out.
There you go. Beautiful. I learned something today. Bill, I know you got to run.
Yes.
Guys, I appreciate your time. If you do not have this suite of products, guys, from Allstate, down below is my email. Hit me up with an email and I'll get you set up for contracting with Allstate. I think they've got a great suite of products that you can offer the insureds. And again, what's the worst case that they could tell you when you offer the plan? Worst case is they say no.
What, you're 100% right. And this is what we tell agents is, all we ask is that you don't make decision for the customer by not bringing it up, right? It's up to them. I can't put you in a headlock and make you buy this, right? And understand that some people aren't going to buy it, right? So you don't want to knock yourself out trying to push it on everybody. You're going to find resistance. But in the end of the day, nobody knows these products are out there, these supplemental products. The customer's counting on you to bring it up. And the icebreaker question that we like to ask is just simply, like you said earlier, what's your plan to cover the out-of-pocket, if you don't mind me asking, and who's your dental with, who's your accident with, who's your critical illness with? They're going to look at you funny 100% of the time because they don't have critical illness and they probably want it. So, Louis, thank you so much for the opportunity here. My team has over 100 years of experience in the health insurance and supplemental space. So when you get contracted, if you need help with training beyond what you can provide, sir, we're standing by to help you. And looking forward to working with your new people.
Great. Awesome, guys. All right. So down below, you'll have my information. Guys, don't forget to subscribe. Comment down below. I do respond to all the comments. And most definitely subscribe to the channel as I've got lots of training for you. Again, Phil, thank you so
sir.
much.
Take care, everybody.
All right. You too.
Bye now.
Bye-bye.